In this video, we'll look at Ron Barron's calculation for his 2030 stock price predictions of a 4.5 trillion market cap, as well as his line of thinking, and the likelihood that this number could come to fruition. Before we go there, smash that like button and subscribe. Billionaire investor and philanthropist Ron Barron said on November 4th that Tesla stock is expected to be worth 4.5 trillion by 2030, less than 3 years from now, in 2025. He projects a massive surge in Tesla stock price, which we the ones who know that this company will change the world can utilize to retire in less than 24 months. 2022, that Tesla's valuation would rise by 570% to $4.5 trillion over the course of the next 10 years in an interview with Market Insider. He is recognized as one of the most successful investors of his generation and has over 50 years of experience in the financial sector. Barron has established a reputation for himself by making investments in rapidly expanding businesses, such as some of the largest names in consumer goods, healthcare, and technology. Let's get started. According to predictions, the value of Tesla's stock, which was trading for less than $200 per share when this video was made, could rise to between $500 and $600 per share in 2025. Potentially increasing the value of the company by 2.5 to 3.5 times over the following 10 years. Furthermore, it is projected that the corporation will grow 7 to 8 times faster than expected, reaching $4.5 trillion in the same time frame. According to Barron's bullish predictions for the next 10 years, Target expects Tesla will sell 20 million cars annually, whereas Tesla itself estimates that it sold 1.3 million in 2017, according to Musk's business. In addition to ignoring our own personal concerns, the wording used in such statement is primarily negative. Let's move forward and ignore more profitable opportunities. According to his statement, by 2030, he and Tesla will have sold 20 million cars annually, each costing $50,000. This would generate $1 trillion in revenue and operating profits of roughly 30% or $300 billion when using a 15x multiplier for motor sales alone, automobiles, and applying it to $300 billion in yearly income. I anticipate between 20 and 30 million cars, at most. Now let's look at the last piece of evidence that, in my opinion, proves how completely illogical this prediction is. Given the rapid pace of development at Tesla and Elon Musk's prediction that robots will soon outnumber cars, Ron Barron expressly excludes robots from his projections and chooses for a future in which fully autonomous driving, FSD, is not possible. We'll skip right to the part where he emphasizes no bots, no FSD, and no batteries. After conducting calculations, the results are mind-boggling and are presented in this video. When we fast forward to 2030, we can estimate that the delivery of 20 million vehicles at $50,000 each would generate $1 trillion in revenue. However, before we do that, let's take a moment to consider where we are now and how far we have come. If we take the current stock price trend into account, the valuation for vehicles is expected to increase 7 or 8 times its current value. Now let's discuss margin of profits. I realize this sounds crazy, but let's go with Barron's statement that they will keep taking and diluting until you are worth 7 or 8 times your money, or slightly less than 67 earnings per share. It's hard for me to believe this isn't 69 at a PE of 15, which would equate to $1,000 per share and a market capitalization of $4.5 trillion by 2030. Why trade levels have remained unchanged? Ron Barron predicts that the stock would have been greatly diluted by 2024 and 2025, but in my opinion, the number of outstanding shares will actually decrease by 2026 or 2027. Here's why I say this. Barron assumes a 5% annual dilution, but I believe that this is far from the reality and that buybacks will only result in a 1 to 2% dilution. After all, who is going to sell Tesla shares these days? Elon will, if anyone, because he is a 0% entrepreneur, and no one else will. Assume, for the purposes of this analysis, that each vehicle will cost $50,000. However, in my opinion, this price per vehicle cannot rise above $40,000 in 2030. They would have $600 billion in sales, a 30% operating margin, $80 billion in net income, and a PE of 15 if they produce 20 million vehicles, which is probably closer to $30,000. We'll learn more about the vehicles later, but for now, it seems more likely that we should circle back on Ron Barron's predictions and see if we can figure them out given that he predicts the stock price will rise to 500 or 600 in 2025. That way, we can calculate the stock price and PES. Barron estimates that just vehicles alone will reach $2.7 trillion by 2030, which equates to a share price of $600 per share from vehicles alone. If they achieve their projected net income of approximately $13 billion in 2022, a PE of 60 is reasonable. The average PE is 63, with a probable range of 55 to 65. With a PE of 60, the market capitalization surpasses $700 billion, and the price per share would be $240. Therefore, the market value of the stocks again rise higher. Additionally, I think that during a period of considerable quantitative tightening and rate increases by the Fed, assuming the P is lower at 55, the macroeconomic environment and market sentiment will trample on the PE, causing the market cap to fall below $700 billion and the stock price to plunge to 220. However, that is overly conservative. Given that the price of shares has already doubled in 2023, a PE of 75, a market value of about $1 trillion, and a share price of $300 per share in 2023 seem more plausible. Given that $300 a share might possibly be too conservative as an end-of-year estimate, let's talk about 2024. Assuming that the stock price in 2025 will be $434 per share with a market capitalization of more than $1.5 trillion. Let's begin with a PE of 43. With a market valuation of over $2 trillion, I anticipated a PE of 37 and received 550, matching Ron Barron's 500 to 600 price projection for 2025. In 2026, a company with a market capitalization of more than $2.5 trillion will have a 682 stock price at a PE of 32. The stock price in 2027, with a P/E ratio of 27, would be 816, and the market capitalization would reach $3.1 trillion in 2028. The price per share would be 843, the PE ratio would be 20. The market cap would reach $3.2 trillion in 2029. Shares would cost $9.79, and we would eventually reach 2030. We get at Ron Barron's projected stock price of $1,000 per share, valued at $4.5 trillion. Like any prognosis, this could happen, but it also might not a forecast, and you should be skeptical as with any other forecast, at a volume of 20 million vehicles a year. The idea that every car would sell for $50,000 is absurd, and Ron Barron prominently features this idea. $30,000 is the estimated one-time cost for FSD in 2030. This is due to the fact that in just 2 years, our income increased from $8,000 in 2020 to $15,000 in 2022. Since we don't currently have a subscription base, I'm going to assume that 15% of all newly sold vehicles will have FSD, just to be safe. I'm estimating a doubling in FSD expenses over the next 10 years. The conversion rate ought to be closer to 30%, but I'll be cautious and round down to 15. As a result, our initial vehicle's price per share of $344 in 2023 will translate to $396 per share immediately going forward to 2030, taking FSD into account. Our market cap is $5.7 trillion, or $1,227 per share, without batteries, energy, or robots. Just FSD not too bad for a cautious estimate. Presuming you require the figure that is widely thought told the magic number for retirement, $1.7 million. If, however, the price per share in 2030 is $12.67, you will only need 1,342 shares to live your dream retirement in 7 years. That's incredible, isn't it? Share your thoughts with us in the comments section below. If you enjoyed the video, please hit the like and subscribe buttons. I'll see you on the next video.